Welcome back to another Sunday walk video. It is beautiful out once again. Look at that scenery behind me. And I'm here to talk about, of course, Bitcoin and what to expect this coming week, and also reflect a little bit upon last week, because last week was absolutely fantastic. So yeah, let's start out talking about last week. Obviously Bitcoin hit an all-time high and went a little bit higher, and that's fantastic. But why did that happen? Well, primarily two reasons, and they both relate to the same thing, but two reasons why our 30-year and 10-year yield went up for the US bonds, that is. There's two reasons for it, and it's because of the rising yield that are forcing a lot of people to just get out of dollars and bonds and get in to Bitcoin. So that was definitely the main driver why Bitcoin went up last week, right? Not only did we go up above our previous high of 109, we ended up at like 111.5, somewhere around there, close to 112, right? And since then we have come back down a little bit, but I'm going to tell you guys why. It's not time to be worried about that. But the reason why Bitcoin went up was due to the rising yield on bonds. And I talked about this last week, and it's not a good thing for the US, not at all. And two reasons why the yield went up. Number one, the prior week we had Moody's cut the US credit rating down from AAA, which is the highest there is, down to AA1, which is one notch below, which is still not bad, but an overall cut still worries some countries, some investors. The ability to pay back. There's the whole thing about credit, just like a credit score, right? You know, you and I and everyone else has a credit score. It's basically just measuring the ability to pay back loans. And as a country, for US, that's never been a question, right? There's never been a question of whether or not the US will default, will ever not be able to pay back what has borrowed, right? That's why we have always been at AAA status for I don't know how long. But the fact that Moody's cut it down a notch makes some people worried that maybe that is going to be no longer the case, that the US could forever always pay back its debts, like the Lannisters, if you get that reference. So that was one major reason, right? After that cut, we saw a media effect where bonds and their yields started rising up, because obviously a lot of people did not like it, and there were many that probably sold and said, hey, maybe it's not such a good idea to be so heavy into yields. Bonds for their yields. So that's number one. Number two, something that I talked about in a prior Sunday walk video, I believe, was last week we had an auction. The US had an auction for 20-year bonds, and it came in weak. Not super weak, but weaker than general. The US tried to sell $16 billion of the bonds, which was like a big increase over the prior month. The interest rates offered, the yield offered, was much higher than April, and overall the demand came in soft. So again, partially this is probably due to the Moody's rating cut, but the fact that there's less demand on bonds overall is worrisome. So again, immediately after that, the yield rates went up even more on the 10, on the 20, and the 30. So these are two reasons why overall rates on all the bonds and notes and treasuries went up, along with the Moody's rating cut. And because of the rising yield, that is why Bitcoin went up. And that is why I think Bitcoin is not going to stop going up, because this is a big thing. This is a big macro, I guess, event that's happening, and there's really no solution in sight, really. And it's really bad. It's really bad. So I did a little more research, right? I kind of know why it's bad, but there are actually other things I didn't even think about that makes the situation worse. To start from the beginning, in case you're not aware, the US, just like all other countries, I'm singling out the US, but really it applies to all countries, okay? So if you're watching this from the UK or Canada or Australia or wherever, you're dealing with the same situation. You're just probably not hearing it as much, but it's the same thing. As a nation, we only have a few ways to make money. We're operating as in a deficit. So we spend a lot more than we make. How does the country make money? Well, through taxes. We don't collect enough taxes based on how much we're spending. So the other ways to supplement this is to borrow money. That's what the bonds and treasuries are for. You issue them as an IOU. So other countries and companies and funds, they would buy them, right, as a safeguard, especially during volatile times. And buy them, essentially lending the US money, and the US, of course, has to pay interest. That's what the yield is. And when it matures, you have to pay it back. So, second way to make money is to borrow money, and if you can't borrow enough or collect enough for taxes, what do? You print money. That's the only other thing. And unfortunately, the US has the Fed, and other countries have their central banks, and they have a money printer. And they can print as much money as they want. Really, these days, they don't actually physically print it. They just type in more zeros in the computer, and that's it. And there's more that's in there that they are able to distribute. So the third option of printing money has always been around, but you can't print too much, because then you cause hyperinflation. Normally the Fed, and Powell has said this, he likes to see a 2 to 3% inflation rate or increase year over year. But if you print too much, like during COVID time, we were way higher than 2 to 3%. And most of the, I guess, the elevated prices for goods and services has been entrenched. So we just had to get used to the new figures, really, right? So if you print too much, you go get a whole lot of inflation. 40% of the overall money supply, 40%, think about it. USD has been around for what, hundreds of years? Maybe not. Yeah, I don't know. I actually don't know our current USD system, how long it's been. I'm just going to assume hundreds of years, maybe. Yeah, I think it's like 200 plus years. I remember last time I saw something like that, it was like 200 something years. I forgot where I was going with this. Oh yeah. So in its entirety, 200 plus years of us just printing more money, 40% of supply was printed between 2020 and 2022 because of COVID. So imagine the overall money supply increasing by 40% within a few years. That money, of course, becomes 40% less valuable. And of course, if it's less valuable, then everything goes up in price. So the whole time, we were in crypto winter, I cover a lot about Powell and how he was trying to curb inflation by hiking rates, right? Blaming it on supply chain issues and stuff like that. He finally admitted years later that a lot of it was just due to irresponsible spending and printing. He couldn't admit it back in the day, but now he admits it because that was the primary reason for inflation. So my point is, we can't just print forever. I mean, I take that back. We can print forever as a country, but we want to limit it as much as possible. Otherwise, the more that are in circulation, the less valuable the dollar becomes, and that's not good overall. But, you know, if we can't collect from enough taxes and we can't print, then, you know what, then we have to borrow, right? And borrowing has been pretty much our biggest money maker for a long time. And when you're going in a situation where people don't want to lend you as much money as before, and you have to pay more to get people to lend you money, then you're putting yourself into more debt. So I got some figures. Every 1 percentage point higher on a yield basically equates to us needing to pay, well, this is calculating how much we have right now, but if we have to go up by 1 percentage point with our bonds that we're issuing, we're facing like an additional $2.3 trillion in just interest in the next 10 years. So roughly $230 billion of additional interest per year. That's just with a 1% increase, right? And we have seen our 30-year yield skyrocket is above 5, 20 years above 5, 10 years above 4.5. So really bad, right? And what does this all mean? Well, the US can't borrow enough, then it has to print, right? And also why this is bad is because something that I didn't think about was the fact that the people that are holding bonds right now, the ones that are holding a 10-year, 20-year, 30-year, they can't sell them anymore because their bonds are not worth as much because they're not giving off as much interest, right? The yield is lower than what's offered now. So it's an IOU that's less valuable than a new IOU. So that actually puts a lot of stress on the current financial system because a lot of the banks and funds that hold an enormous amount of treasuries, they're actually underwater because they can't even sell off, because if they sell off, they're selling off at a negative. So that's also extremely bad. It puts a ton of pressure on financial companies that hold a lot. So that's also bad. This is very bad. Anyways, what's the point to me sharing all of this? This situation doesn't seem like it's going to get any better. This Moody's rate cut, right? It's not like the next day they're going to say, oh, okay, we're just going to bring it back. They said they cut because they see how much debt we're accruing, how much interest we're paying out, and they don't see an end of the tunnel where we actually start getting better, right? I don't think anyone thinks that. All the politicians and everyone just wants to push it to future generations. No one wants to deal with it. We have an unlimited ceiling for deficit, and we plan on adding, I think, 3 trillion or 4 trillion to it in the next 2-3 years. That's not going to help things. So, I mean, this situation in America is actually getting really bad. And then, of course, all the tariff stuff, right? The uncertainty with trade, with tariffs, you know, prices hiking. These are no good. That's why, you know, a lot of times Trump and others are like pointing fingers at Powell and saying, Powell, you're an idiot. You need to cut rates. If you understand what the Fed is supposed to do, then you'll know he's stuck between a rock and a hard place. When prices are going up, when inflation's going up, he's supposed to be hiking rates. He's not supposed to be cutting rate. So the Fed fund rate, you know, is stuck at where it is. I think it's like 5.25%. He can't possibly cut when the prices are about to go up. So that's the predicament he's in. Yet he's under a lot of scrutiny to cut. But what's going on with the 10-year, 20-year, 30-year is not his fault. And even if the Fed does cut the Fed fund rate, there's no guarantee that's going to bring down the treasury yield either. So this is the spot we're in, right? It's a mess. It's a big mess. There's a lot of people that are predicting doom ahead. There are a lot of people that have been saying this for a while. Some pointed to the bond market. And now what's happening is starting us down that path. And it's kind of scary. However, swing back to Bitcoin. This is the reason why Bitcoin has been so strong. Why the alts have not been strong. Why Bitcoin has been strong. Because there are a lot of banks out there, countries, companies, funds that are now coming to a conclusion, we should maybe not hold so much dollars, should not hold so much treasuries, we should hold on something better. A lot of them already have a ton of gold, and now they're turning to Bitcoin. And that is the reason why I think last week we hit a new all-time high. Even though as I'm filming this right now, we're at like 107.5. We're up still over 4% week over week. I know a lot of people may be thinking, whoa, we're down from our all-time high. We're only down slightly, but we're still up like over 4% for the week. So for me, I think what's happening, all the terrible things that's happening macro-wise, is only strengthening my faith in Bitcoin. I already knew it was bad, but now it's like starting to turn really bad. And I don't even see how things can improve, really. 10-year, 30 years, 10-year, I think affects mortgages. Mortgage rates are now above 7%. They also affect car loans. Car loans are now getting above 9%. And then the ability for a business to borrow becomes less because they don't want to pay higher interest. So overall, the situation just not good. It's good for Bitcoin investors though. Those of you guys that have been DCAing since our low of 2015 or 15,000 low in 2022 to now, you've done pretty well for yourself. And I think things will get better for Bitcoin. More and more people will turn to Bitcoin and put more money in and realize that this is the best thing to hold if you want a great hedge against inflation and a store of value. Despite the volatility, which actually has been decreased quite a lot compared to previous cycles, even factoring the volatility that we've seen, still nothing is better. Nothing recovers faster, nothing appreciates faster. It's the ultimate hedge against inflation. So looking at current level and going this week, I had ChatGPT help me look at some factors. ChatGPT does believe that if we stay above 106, we're golden. If we stay above 106 and just hover between where we are right now, we're waiting for Bitcoin to go back to 109.5 and break above. It thinks if we do today, let's say tonight, we break above 109.5, that's on our way. That means we are on our way going back to 112 easily. And if we break above 112 during this week, we will head to 125, 130. That's what it thinks. But on the opposite side, if we can't hold 106 and we go below it, then we may go back down, I think, to 101 and 102. So that would be the next level. And even then it wouldn't be the end of the world, right? But it thinks we're in a really good spot. We were overheated, you know, a lot of factors showed that we needed to cool off. So that's what it thinks, short term. I asked it to apply all these signals and indicators to Bitcoin, and it thinks we're very healthy. We're just cooling down from our overbought environment, and we're holding well. And if we tonight or tomorrow break above 109.5, which is very easily from our price point, we're on our way back to 112. So I'm looking forward to it. And this week we have Bitcoin 2025 conference. Starts on Tuesday. Traditionally speaking, when we do have these big conferences, Bitcoin tends to go down. That hasn't been the case for this year. And I think this year's conference is going to be even more explosive. I mean, you got some politicians there like Vance that's going to be speaking, who knows? Loomis is going to be speaking, who knows what they announce. Could be extremely bullish, right? So overall, that's it. I think this week is going to be good. I always think it's good, but like just you know, just putting two and two together with all the macro stuff that's happening that's really bad, I think it's only going to be great. These things are only going to be great for Bitcoin. Now, as for the alts, I know alts do not get the same effect as Bitcoin. Alts went down a little bit more, but still, most held on to their gains from last week. I think right now, Bitcoin is still the big daddy, right? Obviously, it's going to lead the way. So, Bitcoin coming back to its previous high and going further will bring the alts up. But right now, it definitely seems like Bitcoin has all the liquidity. We're not near altcoin season yet. So, a lot of you guys that are very heavy into alts, you still want to think about loading up on Bitcoin, getting a good amount of portfolio in Bitcoin, because right now Bitcoin has been the best performer by far, and it's not even close. And with the way the macro conditions are shaping up, there may be more money going to Bitcoin. So a lot of people are looking for that Bitcoin dominance to come down. That may not happen for months until later this year. All right, guys, that's it for this video. I'm gonna wrap up this walk. Smash it a like, subscribe to the channel. I'll see you guys tomorrow morning. Let's see where Bitcoin heads to. All right, 8:30 a.m. Central Standard Time. Take care. Bye-bye.